Great stuff. Okay, we're in. All right, don't see anybody in the room yet, but shall I start the content? I presume people will probably watch this back, so I will start the content. Right then, so let me quickly share screen just to get us started. Good morning, guys. How's everybody doing? We are going to spend the next 25 minutes to half an hour with each other, and we're just going to talk about what I am looking for this week in the markets. You can feel free to be involved and put any questions in or any comments. You are welcome. Interested to see what you guys are looking at, what you think is setting up technically. We're going to look for things off the chart. So what's the suggestion for the trading week? And I'm going to start by telling you that the weakest currency in accordance to the seasonal charts. Now, for the week, now this is over a 10-year, a 15, and a 20-year period. The weakest currency coming up for this week is the dollar. So last week, actually, the dollar was the strongest, but it has literally hit a turning point in its proceedings, and it's now likely to go down. The only caveat to that is if we look at the dollar was meant to be strong for 2 weeks. Now this is a 2-week chart, and we can go through all of these here. Week 1 on the Aussie was strong. Week 2 was weak. Here's the pound. Week 1 was bullish. I'm not going to say it's strong, but it was bullish, and week 2 was the weak one. The dollar was weaker against the CAD in week 1, but in week 2 it was stronger, and it's the same against the Swissy, and it's the same against the euro. A little bit of a pause there actually on the euro, rather than it being weak, but the same on the Kiwi. Strong week 1, weak week 2, and the same with the Aussie. Sorry, the dollar yen as well. So that may suggest that we could be a week out on the seasonal bias kicking in. So it was meant to be strong for 2 weeks. It was strong for the second week of those two. And it actually hasn't, against some of these currencies, even retraced all the way back up to when it did actually open on week 1. So it could be a week out, which suggests the dollar might strengthen this week and then possibly turn next week. But we must be aware that the dollar's got a seasonal bias that does suggest a turning point is coming for the dollar. Now, the strongest currency for this particular week is the Swissy. And we will look at the Swissy in a bit of detail in a moment, but let me run down the strongest currencies to the weakest. Now, this is the interesting aspect of the seasonals coming up. The dollar is coming into a weak period for this week. However, actually over a 1 month period, the dollar is also relatively negative. So we're looking at a very short-term time frame, which is the week, into a longer-term time frame or a medium-term time frame, which is the month. And then when we sort of stretch out to 3 months, it's also quite tepid. It's not particularly weak necessarily, but it is quite tepid. And it does suggest that this week particularly could be a bearish period, but there's some bearish periods coming over the next 1 to 3 month time frame for the US dollar. And if we compare that to the Swissy is the strongest right the way through. This week it's the strongest. 1 month period, it's very, very strong, and over a 3 month period, it's relatively strong as well. So the Swissy looks like a currency to watch out for. Now we'll look at the drivers, but the Swissy is the currency to watch out for on a seasonal basis. Now, if we look at the COT data next, just to see what else is kind of coming off the chart, then what we see with the COT data is now this is the euro. Now the euro is also relatively positive against the dollar as we go into it. Now, these are the non-commercials. So the non-commercials, the commercial positions are the big guns, and they will effectively have a much longer term position on a particular currency. The non-commercials are shorter term traders effectively, so they're much more aligned with what's happening in the market, and we can have a look at the maybe the proof of that a little bit, but without going into too much detail, this here is the turning point for the euro dollar, and that, so you probably can't see the date, but it's the September the 6th in 2022 was the turning point, and this is what's happened to the euro in that period. It just strengthened and strengthened and strengthened right the way through. Now this up here is the open interest, and it's showing us really how strong is that move. And when it starts to pick up, we can see not only are the buyers net higher than the sellers, but also they are probably adding to positions here as well. Now, if we bring that to the chart, so that's September the 6th, 2022, and if we bring that and have a look at that and what that looks like on the chart, then it shows us that the non-commercials, this is September the 6th, where is it? Just there. That's this is the in-between times. Now the COT data is reported the Friday after, so that happened, that's what they were doing on September the 6th, but it's reported after. But you can see the subsequent move in the euro, it did hit one more low. So the timing wasn't right on the money, but they've been right ever since, you know, that the euro has been strengthening against the dollar. So well worth us looking at how the non-commercials are looking at the dollar right now. Looking at the currencies right now. So we'll have a quick whip through all of them. The Aussie, the blue line is the non-commercials. Aussie is in accordance to the non-commercials, very weak. The CAD took a little turn last week, but it has been selling off in recent times. The Swissy, which we're really interested in, so we'll focus on the Swissy and the dollar the most. The Swissy that we're quite interested in, it's got a little bit of positivity. It did turn down a little bit last week, but you can see that the open interest is building here. So that's something to watch out for. Now the Swissy did sell off last week, as we know. Does this start to turn and give us a longer term position? Because we're looking at potentially a week, a month, and 3 months into the future, which the Swissy is strong against the dollar throughout all those particular periods. So we're looking really for this to start turning to the upside. This hasn't happened yet. So that suggests we could be a little bit early. The euro has kind of leveled off a little bit here. Not a big explosive move like we saw here. You know, a lot of buying there, a lot of buying there. Just a little bit weaker coming in into the buying. This is the pound. The blue line again took a dip to the downside last time out. Yen strengthened a little bit, but look at the dollar. It's been weak right the way from the 21st of June in 2022. And that's been the move to the downside, and it's still remaining pretty low here. So it does suggest that the bears are still in control of this, and the bears are still quite motivated to sell the dollar off. The Kiwi took a little bit of a dip to the downside as well. So now the one we want to see is the Swissy and the euro, probably, because these are quite closely correlated. So we can see some negativity in the COT data with the dollar. Little bit of positivity with the euro, in as much it's holding its ground, and the Swissy has yet to turn. So that suggests we could be a little bit early. Now, if we now focus on, so we know the seasonals now, we know the COT data. Let's focus now on the fundamentals, and then we'll have a look at the charts. So these are our fundamental releases for the week. Now, what we want to see, and this is quite interesting, if we look at some of the drivers, you know, why was the dollar weak 2 weeks ago, and yet it was strong last week? Well, if we go back, so we're starting on the 14th. Let's go back to the start of May and come into that 2-week filter there. There we go. And we'll just have a look at, let's have a look at the dollar. get rid of some of these. So we're just looking at the dollar so we don't get too much confusion. We might leave the Swissy on actually as well. And actually we'll also leave the euro up. We'll leave the Swissy, the euro and the dollar. Right then, so when we started, this is really sort of like how the last couple of weeks have shaped up. So the seasonals give us the bias. It will tell us what tends to happen at this time of year. The COT data tells us what the biggest investors and traders are really doing in the United States. You know, they've got a compliance. They have to comply and disclose what they are buying and selling. So that's really telling us what they're doing. Now, what this is really going to tell us is there a trigger? Is there a trigger? Is there a short-term trigger? Now, when we look at the dollar initially, anything under 50 on this ISM is negative. Now, it was a beat, so we can get a little bit confused by this because it's green, but it was still negative, and it was telling us that the economic picture in the United States was weakening. Now, the problem really, if you look at this group of numbers here, is that the prices were going up. So inflation was still increasing. So that's actually quite positive for the dollar. And the employment picture was also going up. So that's positive dollar. So on the Monday, we probably wouldn't have seen too much in the way of negativity on the US dollar. CPI in the Eurozone was weakening. So again, that would have been quite, relatively negative for the euro. And then we start to come into Wednesday. And the Wednesday numbers here were also showing economic contraction. That was under expectation, but not too bad. But we can see a little bit of contraction here. Sorry, contraction from the previous print, but not necessarily contraction overall because it's over 50. But still, just some of these PMIs were just a little bit tepid at best, really. This was the rate decision. So the rate decision then came out on the first week, and it raised it at 5.25%. And the intimation at that point from the Fed was that a pause is likely at the June meeting, so the dollar sold off on week one. So this gives us our reasoning for why the dollar may well have weakened after that first week. The ECB did the same thing. They raised by 0.25%, but they did also suggest that they might well have further to go. So again, another reason for the dollar to weaken. Then we get these initial jobless claims. Now this number needs to start growing. We're really data dependent, and we're very data dependent on the labor market. Now these numbers did start to grow a little bit, weak for the dollar. Non-farm productivity, weak for the dollar. So all this stuff is now sort of starting to stack up some weakness for the dollar as we go into the last few days of the week. Now, if we go back to the chart, really, in fact, we'll come to the chart. No, let's go back to the chart really quickly. Let's go back to the chart really quickly. Now, this is the week we were talking about here. Now, if we have a look, day over day, 1, 2, 3, 4, 5, 1, 2, 3, 4. Is that the start of the week? That was the start of the week there. So the dollar initially sold off, but then it did. The euro did start to sell off, and we saw those strong numbers from the United States on the Monday. But then we started to strengthen in the euro just before that that rate decision. Then after the hawkish position, the dovish position from the Fed, it stayed relatively strong. But then the euro started to show some weakness, and we start to move to the downside. Now we started to move to the downside this week, just gone, on this day. Everything else was relatively stable. From here, we start to move down. Now, why was that? What was the dollar showing versus the euro during that particular period? Well, let's have a look. So this is Friday. Now this is last week's data. Here we go. Core CPI from the United States, a little dip down, nothing really major there. CPI month on month actually was in line with expectations. So again, that gives a little bit of an indication that the dollar could remain strong, and maybe the June meeting won't be a pause. So remember, the Fed suggested a potential pause. Do they have reason to pause? Well, we want to see CPI data really start to dip closer to 4%. CPI year on year dipped down a little bit, but it's this core number that they really look at. So not necessarily strong, not necessarily weak, but if you've been selling the dollar into this point, it might make you a little bit nervous and possibly have to close some positions. Continuing jobless claims under what was expected. So the jobless claims were under. So showing potentially a relatively strong labour market still. The PPIs were a little bit underwhelming, and the jobless claims actually did hop to the upside on the Thursday. But the problem may well be to do with, and then the dollar really did strengthen off the back of this inflation expectation. Look at that. 5-year inflation expectation 3.2%. So quite mixed. I mean, the numbers are a little bit mixed, but it does suggest that inflation is sticky, which also then puts the pressure on the United States and the Fed to possibly stay with the program and continue to raise interest rates. The ECB, in comparison to the Fed's interest rate, is a lot lower. So they've got some catching up to do. But what the market is suggesting is that they might have to stay in lockstep and continue this 25% basis point, 0.25% rate hike for the near-term future, and we see the euro weaken. Now, going into this week, what could turn that position around? You know, would the euro potentially strengthen against the dollar? Could the Swissy potentially strengthen against the dollar? Well, let's have a look. So next week, we've got some PMIs from Europe, and they may well come in under expectation because we're seeing this global contraction. So if they come in under expectation, that's not going to boost the euro really very much at all. PMIs from the United States as well might have some bearing. Core PCE prices. Now this could be a trigger. Now this is Thursday. So this could be a trigger for some weakness in the dollar. It's expected and forecast to come in 1% lower than the previous print. So that in itself could weaken the dollar on Thursday. So we're looking at Thursday there. GDP data, that if that comes in weaker than expected, it's actually looking like it's forecast to come in quite strong. But if that comes in weaker than expected, that could have a bearing. PC prices, of course, would also have a bearing. And the number that we should be really looking out for is what do we got here? Monday. That's going into Tuesday. We don't look like, it doesn't look like. Doesn't look like we got any jobs data on this week coming up, but that's the number really that we should be looking out for. Employment level. So Switzerland's got light data releases, and actually the euro's pretty light as well after Tuesday. So it's going to be driven by the dollar. Anything that changes direction this week is going to be driven probably by the dollar, because the euro and the Swissy don't look like they've got anything significant released after Tuesday. Now, just going to check the Turkish election results. I don't think that will have much bearing, Gary. That's a fair point. It might do, and there is also a holiday, I think, for Switzerland, so that might sort of calm things down for those two currencies, but for the euro and the Swissy. But I don't know whether it's going to have that much impact. It may. I mean, that's a really good point. It may. It's not something that I will look at because it probably won't affect the dollar. It probably won't have that much bearing on the dollar, unless, I mean, I'm not aware of the party and the positions of the parties. Unless one of the parties is very anti the United States and they get in, maybe it could have some bearing in the market. But I think it's going to be the data that we'll be looking for. So just to kind of recap, seasonal suggests that we should be looking for weakness in the dollar over the course of the next week, month, and 3 months. They also suggest looking for strength in the Swissy over the course of the next week, month, and 3 months, and possibly the euro. Euro is not too bad actually. Over the next week, very strong. Over the next month, okay, and over the next 3 months, it's okay as well. So euro dollar long, Swissy dollar long would be okay as well. Sorry, dollar Swiss short would be okay. Now, if we look at the charts, do we have an area where the euro could turn against the dollar? So this is really the last sort of point of call here. Do we have an area it could turn? Well, we currently do sit on an area of potential support here. Might have just dipped underneath that. Now that suggests that it could be that level. It might recover, pop up, and come down. So we'll look at a technical reason that we could trade that. This could be the area here. There's quite a strong level there. It's a little bit messy here, but it looks okay. So there's another possibility there. And of course, the last one would be around here. So these are three areas that would be interesting to look at euro dollar longs. Now, if we're going to look for that, what we're going to need to see is a genuine turn in the price action. So what I would do at this point is I get an idea of what might happen sort of like coming into the week. I'm looking for that data to really drive the ultimate decision, the ultimate idea. The idea is euro dollar long, dollar Swissy short, but we know with the seasonals possibly being slightly out of sync, the dollar might strengthen a little bit first. So it could come down here, could come all the way down here. Either way, if this was to give me a signal, I would need to see a bar that goes up and then a bar that comes down and tests this area. And then we can start looking for any buy signals from this point. So we got at least 2 days, at least till Wednesday before we can start looking at the long position here. The next, and you can see that would possibly even create a little head and shoulders from here. There's the left shoulder there. There's the head, and it might even sort of like come up into this area. So looking into this area initially, I think could be quite interesting for the euro dollar. So a rally up to this point here, that would be an initial target. But really, we need to see the price action turn. We won't just be going straight in and saying, you know, the COT data suggests this and the seasonal suggests this. Let's just do it. The charts now need to behave in a way that suggests we've got a long. If they don't, we haven't got a position to take. So we will we'll keep our eyes on that. The dollar Swissy is the other thing, of course. And the dollar Swissy is also at a potential point of resistance, very close, isn't it? So this area here it's really struggled to get through. It might be a little bit higher, so it might be a little bit of upside in the dollar for the first few days, and it might even take us right the way up to this point here, or finally this point here. Possible it's in that area. These are the three positions. Now, if it gets through that area, it's just off. Not interested at all. But the data from the United States hasn't been sufficiently strong to suggest that we should be. It was quite mixed, if you remember. So it's not sufficiently strong to suggest we should be staying with the long dollar. Switzerland's information has been a little bit confused as well, as has the Eurozones as well. But both those currencies have got much further to go in their cushion to raise interest rates than the Fed has, because the Fed's already at 5.25%, whereas the euro is, of course, got another 200 basis points before it gets into the same region. So it's got a lot further to go. Sorry, not 200, 150 basis points. The S&B is at 1.5%. So what I'd be looking for with this one would be for it to come up and probably test this area first. It's not absolutely essential, but I'd really like some sort of test there, and then to see a reversal off this. You know, if we can get some sort of reversal bar, a really nice strong bar off this area, then we could well be looking at some weakness in the dollar from that. So we could be looking at a dollar Swiss on the short side from there. So that's going to be the watch list, if you like, for the week, looking at dollar weakness, probably across the board. but particularly against the Aussie, sorry, the euro and the Swissy. However, I will anticipate at least 3 days or two days, but maybe into 3 days, where the dollar does strengthen, and I will be really watching that data release on Thursday, particularly to see if those PCE prices do actually suggest some validity in the Fed pausing in June. So, anybody got any questions or any comments they'd like to add? If not, I believe that will be a wrap. So have a great week, guys. I hope you stay safe in the market. Remember, the biggest thing with any of this stuff, doesn't matter what you pick, it doesn't matter as much, I should say, what you pick as how you manage the money. Big thing. So really focus on your money management for the week. Never sort of over trade. Don't over invest in a position because you're going to have lots of positions over the next the course of the next 3 months to a year. So manage the money correctly. Have an idea. Take your positions, and then it won't hurt you too much. So so that's the big thing going into the week, of course. No problem. You're welcome. You're welcome. Aussie and the Kiwi. Aussie and the Kiwi. Well, when it comes down to looking at the longer term picture for the Aussie and the Kiwi, if we start with the COT data, you start with the COT data on the Aussie, very weak. You know, the investors don't look particularly enthused by the Australian dollar. Less so with the Kiwi. So it looks like the Aussie is the weaker of the two when it comes down to the COT data. And the big thing about the Aussie and the Kiwi, and very weak actually this week, particularly for the Aussie, seasonally is very bearish. Now that's a really good point. Yeah, cool. Say that's cool too. I think looking at for those commodities. But James, but really interesting. You're talking about the Aussie, because the Aussie is also weak going into the next 7 days or 5 days, I should say. Weak on the COT data as well. Weak on the seasonals. Now, if we look at the chart with that, now we know that we quite like the look of the euro and the Swissy when it comes down to the other side of the coin. So we could be looking at, you know, rather than trading the Aussie versus the Kiwi, how does it look against the euro? So euro Aussie, because it might be a safer trade than the dollar, but the euro Aussie has had so a little bit of pickup. Now, if we look on the weekly charts here, that's looking pretty bullish, isn't it? So we even have a potential technical reason to be looking for this. And it's tested this level and rejected this level. This suggests some upside. Now, whether that stops here, that's what we got to watch out for. Whether that stops there, or if it can get through that level, then it's probably going to have a decent shout at getting back to the highs. What we don't have yet really is we got 2 days of upside, and we might get one more push into this area. What would be quite interesting here with the euro Aussie is to see maybe a push up there and then see if it can come down and create, because that would look like a head and shoulders. That would look like some weakness. But if it can start to come down and then possibly create some sort of higher low round here, then we could look at the Aussie, the euro Aussie for a long. But I'd want to see that first. I'd want to see it come up, come down, and then look for it. So we could again be looking at Tuesday, which is when the European data is quite prevalent. You're welcome, James. You're more than welcome. Now, of course, the other side of that would be the Aussie Swiss, and the Aussie Swiss is also suggesting some weakness. It's got this inverted head and shoulders, so it might have a little chance of trying to get up there, but also looking for some downside with a possible target of this trend line down here eventually. So a pop up and a pop down, you might need to see that first. It's not definite, of course, but you know, jumping off this level and popping up a little bit, maybe stopping when it gets to the this point here. and then seeing some downside, that might also create an opportunity. So I quite like that as well. So when it comes down to the bias is suggesting that we should be looking at Aussie Swiss short and Euro Aussie long. But when that sort of shapes up, I'm not 100% sure. Aussie going into 1 month is not quite as weak, but certainly this week coming, it does show some bearish seasonal bias, and the COT data doesn't favor it, where it really does favor the euro. Okay, you are welcome. Have a great week, guys, and yeah, happy trading, and I will see you all very, very soon.